Good morning, good afternoon, good night. Welcome to the BitLab Academy daily live stream. I am honored to tell you that the new BitLab Academy is up and live. We rolled it over last night, and you know what? I just can't wait to share all the new content with all of you, all the new courses from trading fundamentals to the psychology of trading to on-chain data analysis. It's not just, hey, here's exactly what to do. It's actually how to do it and why to do it that way. It really breaks down everything that you could need to really dominate these markets. So how's everybody doing? How you feeling? How you looking? Do you think the market's going to be bouncing from here? Throw a 1 in chat if you think it's bouncing from here. Throw a 2 in chat if you're just completely directionally biased and you're going to say 1 either way. Throw a 3 in chat if you have no freaking idea, because that's really the truth. All we can do is stack probabilities. Now, today we've got an excellent guest on the show. He's been on before. I'll be introducing him here in a second, but I do want to encourage each and every one of you to head over to bitlabacademy.com, the new website, which is right here. You can see, boom, this is what it looks like. If you throw in your email address right here, you'll be getting a special coupon code for 30% off, which is only going to be available for very limited time as we go live. And I'll tell you right now, since you are watching, it is Give Me 30, and you can use that for the courses or the indicators. Now, this is just a pop-up here, but we can see we got all the stuff in here. I've been teasing you all for some time now, but we got all this stuff. And of course, if you are just a beginner and you're just trying to find a good footing in the market, we've got a free sign-up available for everybody. All you need to do is register, and you can basically go through the Bitcoin 101, Blockchain 101, and the Crypto Beginners courses. Now, with that being said, how you doing, everybody? Mitch Shaw, Crimson Caravan Company, Alex Green, my man. I want to give a special shout out to Alex Green because he was, I mean, it was beyond a labor of love with how much energy and effort and time he spent along with our team helping get this academy launched, because it wasn't just me, it wasn't just our graphics team, it wasn't just our web team, it was an absolute village. As you know, we've been working on this the last 6+ months, and I want everybody to know that the courses that are currently in there, that's not the end of the line. That's just the beginning. We're still filming content, but we thought we needed to get this stuff out so we can get this rolling, get you all like in the charts and understanding what the hell is going on, and also outside of the charts into your mind, and realize that this operating system is what determines how you're able to interpret and actually how you're able to pull the trigger in an effective manner. So with that being said, my name's Kellam. Welcome to the BitLab Academy show. If you have not yet, make sure you head over to BitLab Academy on YouTube. If you're watching over on Hit Network, head over to BitLab. It's youtube.com/@BitLab Academy. And of course, as always, I got to tell you, come over to the BitLab Academy Twitter page, which is @AcademyBitLab. Follow us here. What are you doing if you're not following us? Follow us here, retweet this daily tweet, hit that like button. You get entered to win all kind of prizes. We've given away $100. We've given away lifetime memberships. We've given away all kind of stuff. And we draw that from the people that help support this channel. So all you got to do is come over to @AcademyBitLab, follow us, retweet the daily tweet, hit that like button. And without any further ado, I'm going to throw it right to my main man. But first, you got to hit that like button. You got to hit that subscribe button. And you got to ding, ding, ding that bell. Shout out to my daddy-o here in chat, Mr. In1 Actual. How you doing, Brad Kellam? Now, throwing it to my boy, Mr. Caleb Franzen. How you doing, my friend? Where are you at, our traveling correspondent on site with the delivery? What's up?
Kelly, I'm doing well, man. Thank you for having me. Really excited to be here. Congrats to you and the team for getting BitLab Academy rolled out, and the new course material and all that stuff. It's super exciting. So hopefully people take advantage of all that and brush up a little bit on their TA on-chain stuff. I'm sure you guys have a super solid course there. So anyways, I'm doing very well. Super excited to chat with you. I've had this marked on my calendar now, and I've been waiting for it.
Oh man, you know what? We've been waiting for you to be back ever since you came back, since you came on the last time. Now, where are you at in the world? Before we dive into the charts, and I want everybody to know before we get going, we're going to be talking charts. We're going to be showing TA. We're going to be showing, breaking down some of the things that not just Bitcoin. Now, while I am almost 100% only involved in Bitcoin and crypto digital ecosystem, it's important that we zoom out, not just on the charts to look at a broad time scale, but we zoom out of our our myopic vision on just Bitcoin and see what the other contributing factors in the ecosystem are. And Caleb is an excellent voice of reason in all this, because he comes from a traditional asset background, traditional asset management, but he's also very involved in the digital ecosystem. And he gives just a very well articulated and understandable means of kind of digesting the different stimulus that's going on. And I don't mean the government printing stimulus. I mean those market factors that could be weighing down. We could see a bullish chart set up, but price action could go bearish. And sometimes it's not just looking at TA, it's looking at what the fundamental pressures are in the market. So we've got some big things coming up and this week. But before we dive into all that, I want to just point out that we're going to be going all of those things, but I want to just touch on a couple other things first. Life and freedom and the ability to have yourself centered and go after what you want. And the reason why I'm framing it this way is Caleb right now is basically just been on his own life voyage, working his tail off, but not confined to the box of something that somebody else prescribed. He's out there living life, traveling the world. I think you're in Budapest right now. Is that right?
Currently in Budapest. Yep. I'm just over 2 months into my whole trip in Europe. I started out in Croatia. I was in Dubrovnik for a month. I was in Split for a month. And then just at the end of last week, I arrived in Budapest. So yeah, it's been fantastic. It's been amazing.
So how has it been? Did you have any, not anxiety, but concern when you're going on traveling and keeping up with work? And how has that been being a digital nomad, as because you're still, you're on half the Twitter spaces I see, you're still doing other shows. And then meanwhile, you're on a Twitter spaces and I'm seeing you posting your travel pics. I'm like, this mofo is multitasking.
For sure. And apologies, because I did one of your Twitter spaces like a week and a half ago and I just had terrible reception. So that was totally my bad. The stress has really been over the last 2 years in terms of building the business and the brand of Cubic Analytics. Deciding to kind of jump off and do this digital nomad thing has been a big goal of mine when I first, quit my job in commercial banking and wanted to start doing my own thing kind of online, whether that was, my actual trading business or starting to share my market research on Twitter at the end of 2020. And so I certainly had some trepidations about solo travel. I don't speak Hungarian. I certainly don't speak Croatian. And so, I picked up a couple of basics online and, generally just kind of getting over the hump of doing this solo. I think that for me was kind of the most intimidating thing once the business had kind of gotten to a point of sustainability. And it's been a hell of a grind. And so, thankfully now, I don't want to say that the business is on autopilot because I'm working harder than ever. But it's certainly reached kind of this inflection point of sustainability. And so, it's pretty cool actually, because, the traditional markets are open for me between 3:30 p.m. and 10 p.m. So this basically gives me the ability to have the mornings off and work in the early to late afternoon through the evening. And I'm a night owl anyway. So my sleep schedule here is a little bit messed up, but I'm usually going to bed between like 1 and 2 a.m. And then I try to wake up around 8 o'clock in the morning, go out and have some fun, travel around, have my touristy experiences, and just try to, as much as I can, see the world, absorb the culture. And look, I'm a chart junkie. I'm an econ junkie. So this is my biggest passion, is coming on shows like yours, Kelly, and being able to, chop our teeth on some market commentary. So like I said, it's a pleasure to be here.
Well, I appreciate that. And thank you for the context there, because I want everybody that's tuned in right now, every one of you, Karen Swigart Harris, you're here all the time. Gia S, Brad Guidell. I see everybody in chat that's here all the time. And I just want a special shout out to everybody that, and when the markets are, I don't want to even say frustrating, when the markets aren't doing exactly what you want, it's, and Caleb can attest to this, we, as anybody that's doing any sort of streaming, whether it's spaces, whether it's even engagement on Twitter, whether it's YouTube, there's a marked difference in the engagement that happens from people that aren't interested when they feel like the market's doing nothing. And I think, Caleb, you would agree that when the market is doing nothing, usually the best opportunities are brewing. And that also tends to be when the fewest people are paying attention. So shout out to everybody in chat right now. Again, we got about 100 people in chat right now, only 37 likes. What are you doing with yourself? Drop an elbow on that like button, get that engagement up. Let's drive this further. Now, I wanted to just start with that sort of life balance work, because it's not just about let's make money, because at the end of the day, we want to make money so we can take care of ourselves better, so that we can take care of our friends and our family and our loved ones and have a sense of self and freedom and not feel like we're in a cage. If we're getting into Bitcoin and digital assets because we're looking for any sort of financial sovereignty, then shouldn't we also be managing? Because what we're doing now is the same way we're going to be doing it then if we do make money. So let's keep our life balanced. I just wanted to start with a little positive note there, and shout out to Caleb for sharing that story there and also being a beacon of inspiration in that regard. So before we just talk for 30 minutes and get into charts, why don't we do this? Let's kind of flip-flop back and forth. Pull up a chart right now. Show us, what are you seeing? The market fell yesterday. What's your initial impressions on what's going on? And then we can pull back to conversation and then dive into some of the talk about the other economic data.
Yeah, well, let me say this is, we certainly saw Bitcoin and crypto overall kind of pull back yesterday. And I think a lot of that just kind of had to do with some of those lingering fears, kind of the slow drip headlines that we were getting surrounding Binance, pausing withdrawals, this, that, and the other. Because if we look at what risk assets generally did yesterday, like let's just look at the stock market, for example, we actually had a pretty strong day overall. For example, look at the NYSE FANG Plus index. It's an equal weight basket of 10 mega cap, large cap tech companies. That was up about 1.7% yesterday at the close. And so, clearly there was appetite for equities. And we just didn't see that follow through come into Bitcoin and the overall crypto ecosystem because of crypto related risks that happened yesterday. When I checked my charts earlier this morning, as the market was opening, stocks weren't doing too hot. As I look at things right now, the S&P 500 down 0.39%, the NASDAQ down 0.5. But again, if we look at something like the NYSE FANG Plus index, that's down 0.25. So I think generally this market can, broadly be described as being pulled higher by mega cap tech. I did a post about this over the past couple of days talking about how, Apple is basically 5.5–6% away of creating new all-time highs. A couple of weeks ago, we broke out of a classic multi-year bull flag structure. This is the #1 stock in the world, both in terms of its importance and its actual market cap and size. It's certainly not bearish when the most important and largest stock in the world is basically encroaching on all-time highs, right? So, as I kind of look at market internals for the S&P 500, we saw net new highs on a 20-day, 50-day, and 52-week basis, even though the index itself was down 0.8%. And so when I'm saying the overall index down 0.8%, but broadly speaking, the constituents of the S&P 500, 500 of the most important companies in the entire world, were making more new highs than new lows last week. That's super, super important for us to take away. And so I've still had a little bit of a bullish tilt. I've become more let me say it this way. I've become less bearish as I was at the beginning of the year because we've had statistical improvements in the underlying data, right? And so once we start to see that data deteriorate, sure, I'll flip back to being bearish. But when we're seeing stocks like Google today making new 52-week highs, or maybe not 52-week highs, but certainly year-to-date highs, that's not bearish for the overall market, right? These companies, Microsoft, Google, and Apple, are likely trying to pull the market higher. And so with Bitcoin specifically, I think we're trading right around 27.7K, just kind of cooling off. I think that's fine. Like, we really need to frame this as, Bitcoin's basically up 70% year to date. Let's not jump at shadows here. We can certainly get a little bit more cautious in certain moments, but we haven't had material breakdowns in the key indicators or statistical on-chain data points that would necessarily cause me to shift to becoming bearish. And so overall, markets, let me just say this and I'll wrap it up, Kelly, is, markets trend in three ways. You're going to have an initial extension, you're going to have a consolidation phase, and then a continuation of that extension, right? That's how trends materialize. They don't just keep going up in a straight line. And so if we've been bullish on Bitcoin and we've gotten the follow through of that initial extension up 70%, it hasn't been a smooth 70%. We've had some good little whipsaw action. So we should keep that same kind of mindset going forward. If people who are watching this are still bullish, fundamentally, nothing has changed.
Yeah, I feel like this year, I did an interview with Will Clemente this last week. If any of you have not seen it yet, go over to BitBoy Crypto, and I can actually show you right here. Head over to BitBoy Crypto and go to videos, and you can see it's this one right here. This video, I mean, great interview, and he was kind of echoing some of the same things you were just saying there, Caleb, in regards to, you know, if Druckenmiller is conveying some frustration of uncertainty about how to really weigh historical trends versus what's happening now. If there's frustration with somebody like Druckenmiller, then I can guarantee there's not a retail person out there that really has a grasp on what's happening. And that's not a slight on anybody. It's more of an illustration or illumination of the precarious sort of factors that we're having to face in the market right now. Number one, I think, being the fact that we had a global economic shutdown in March of 2020 that we don't have historical precedents over to really weigh what the market should be doing now. And is inflation because of that still? Is there still lingering logistic and supply chain things? Is that because we're expecting that as soon as the supply chain's on, well, that supply chain issue's fixed and the inflation is going to come down immediately. But that's not how things work, because there's backlog stuff, there's cataloged products and inventory that had to be discarded, that had to be thrown away. I mean, this is probably going to be something that is going to have effects in the market probably for the rest of the decade, if not, you know. So with that being said, looking at you know, where the frustration that people want especially the Bitcoin people in Bitcoin. I think there's a larger cohort of people in digital assets that are actively trading or investing, whether they're doing it in a productive way or not, but they're actively being involved in the space. There's a larger cohort that is probably less experienced than the people in traditional assets, just because of the youth, I think, that it brings in. And even, you know, people they're looking for the gains, and they forget to look for gains. You have to acknowledge the pullbacks. And in reality, to get those gains, you have to be able to really navigate pullbacks for the best, you know, the best sort of effective navigation of the market. So we want this to go up and away like 2019, but we're forgetting 2019 wasn't 2 years, 3 years after a global economic shutdown. So if anything, my directional bias, I really hope that we get something like 2019 and we hit that somewhere 42 to 50K. But when I really look at the data and I really look at the charts, I feel like it's probably more likely to get something somewhere between 2015 and 2019 being, you know, are we going to get all the way up to the golden pocket here at 50K? I don't know if the market has that in it. However, the flip side of that, and this is where we can kind of dovetail this into a little bit of the talk of the CPI and the debt ceiling and all these things that who cares about this? We're in Bitcoin. Well, yes, Bitcoin, quote unquote, should or could be a hedge against all these assets. But the reality is there's still a huge amount of traditional formatted or traditional process of trading Bitcoin as it is impacted with that risk on, risk off narrative. So if you're actively trading it, not just buying and holding for 10 years, we have to take those things into account. So even though I think there's a high possibility we don't get that 2019 push up to 50K, you know, I think that's probably less likely. On the flip side of that, because of these issues with the debt ceiling and likelihood of money printing and likelihood of, you know, this sort of fiscal I don't want to say the word WAR, but this fiscal battle with China and liquidity pouring out in those regions, we do have that possibility to get that up, because we're also seeing now, and I'm curious your thoughts on this, we're also seeing now that some of the market push up this year started with a lot of that liquidity pouring in, you know, flooding back into the market in China. So it's not just about the US's fiscal policy anymore. We're seeing this have global impact, global monetary policy impact on these digital assets space. What's your thoughts there, and how are you weighing what, you know, China and the East are doing versus what we're doing specifically here at home? And how are you weighing that into your strategy and trying to determine what the hell's going on?
Yeah. So, I mean, in 2023, capital has the ability to flow globally, right? So Chinese dollars can flow and invest into the United States, into Europe, into Africa, wherever, right? And vice versa. And so, Bitcoin itself is also this global asset. And so it's also going to be impacted by global liquidity conditions. Yeah. So I think you're right there to assess that, part of the, maybe you could say, early momentum that we saw in January was in part due to easy money that was taking place in China and some of the stimulus that was happening there. That's a super, super fair assessment. Your second question about how much do I look at global liquidity beyond, Fed-induced liquidity? And to that, I would say not too much, to be quite frank, because, I don't know what a good analogy for this would be necessarily, but to be quite simple, the Fed is the biggest person at the table, and so everyone is kind of waiting for the Fed to make their actions before following suit. And so the Fed is by far the most important player and is generally going. I mean, look at the ECB, for example, right? Basically, the second or third largest central bank in the world. They always lag the Federal Reserve. They just don't act with as swift of decisions, and they're usually a little bit behind the table. And I think a lot of that generally has to do with, because if the ECB makes a mistake, right, at least they could turn and say, well, we did the same thing that the Fed did, right? And so if the ECB is out making basically like independent decisions or decisions that are totally detached from something like what the Fed is doing, they basically expose themselves to criticism that might be undue, right? So for whatever you might think of the ECB, right, that's just kind of how I see things. So look, global liquidity is very, very important, but the most important player in global liquidity is the Fed. So, I predominantly focus there.
Yeah. So I just retweeted this, Caleb, if you want to go to my Twitter to see this, because you're not going to be able to see it. But Rational Root shared this a couple of days ago. This is a perfect exemplification of global liquidity. And just as Caleb was just pointing out, we can see that the Fed here is at the top of this list, followed by ECB, People's Bank of China, Bank of Japan, I think this is Bank of England, RBA, all of these. But we can see this large, yes, we can do TA on liquidity as well. We can see this large bullish divergence here, huge spike in liquidity that we see right here. This about right here is where the FTX collapse was, and we had that sort of final bottom as it states now, if it does continue to hold, which I think it will. But we see this large spike in liquidity that basically front ran, capital flowing into digital asset sector. But then we also see this sharp pullback, which also front ran this sort of, I don't want to say curtailing, but the softening of upward momentum and a little bit of stress on the market, as we can see, as we have seen with the price sort of faltering at 25 and then breaking past that, faltering at 30, and now in that sort of zone between 25 and 30, 27K region. So it is definitely something to look at. Keep an eye on this, and whether or not you have the tools to pull up charts that pull up global liquidity or not. I'm telling you all right now, you have more access to more information than anybody in the history of the world. So if you can't find something, I hate to say, and I hate to be blunt, but it means you're not freaking looking. You can go on crypto Twitter, literally, and follow this guy right here, the Rational Root. I'm going to be having him on the show here soon too. Incredible on-chain analyst and just data analyst. There's a lot of free materials out there if you just search for it. If you seek, you shall find. I'm telling you that right now. And also within BitLab Academy, we show you a lot of different resources that you can utilize as well. So with that being said, and looking at that global liquidity, what's your thoughts on what's going on? We got some data coming out tomorrow. What's the data? What's the road less traveled? What's likely, and where's, they say if there's a fork in the road, you should take it. So what's our fork in the road tomorrow?
Look, my baseline expectation since we got the November data in December of last year is that we are fully in disinflation, right? So my whole kind of point here has been that inflation has peaked, prices have not, right? And so when we measure inflation on a year-over-year basis, we should continue to expect to see a decline or a deceleration in that number. So not deflation, disinflation. But on a month-over-month basis, we're not seeing inflation go away, right? So, that's kind of normal. But the Fed does not target month-over-month inflation. They target year-over-year inflation. So our focus should predominantly be there. Let me contextualize this by saying, from February to March of 2023, the year-over-year headline data fell from 6.0% to 5.0%. That was the largest decline that we've seen since inflation peaked in June of 2022. So we saw the fastest disinflation decline so far since June of 2022. That's extremely good news from a disinflationary standpoint, right? The thing that's confusing to me is that when I checked earlier this morning for median estimates for tomorrow's headline year-over-year CPI, it was right at 5.0% again. So somehow, some way, the market analysts don't believe that we're going to see disinflation. They think that inflation is just going to stay flat now. Personally, I think that's complete BS. I think it's a complete overestimation, a gross overestimation of what could actually happen tomorrow. And I genuinely would not be, I'd be surprised if it comes in above 4.8% on a year-over-year basis tomorrow. And I'm happy to kind of go over some of the main charts just super quick.
Well, before we dive into those charts, you know, of course, I think everybody, it's not specifically the number that any of us care about. We care about the number because there's a speculation and hope for if this, then Powell that. Right. And so it's one way or the other. And I think in some way, we all may be getting a little ahead of ourselves, because I don't think a number on CPI tomorrow is going to make him do or not do anything. They seem to have been quite resilient in with the way they're framing and contextualizing what their plans have been. In reality, I think it's the first time I've seen in history, maybe I wasn't paying attention before, that government officials in some regard, you know, have been honest about what they're doing. And he told us a year ago, we're going to be hiking until X, Y, or Z. And they've been hiking, you know, every time people are speculating a pause, you know, because we had a couple bank failures and then we had this and then the inflation came down. It's going to be a pause. And they've stuck right to the paradigm that they've talked about. So do you think there's a potential, do you think there's a likelihood of, you know, because the FOMC is what, June 14th, 13th, 14th, something like that?
14th, yep.
Do you think that what would you say is a possibility with the numbers in line with what we would want Powell to see of getting a pause, or do you think that we would still have some lingering hikes still through the summer?
So I think that first of all, I just checked CME Fed Fund futures, and it's basically pricing in a 17.7% chance that we get one more rate hike in the June meeting. So that's basically 5 weeks away from now. A lot can change between now and then, and certainly the CPI data is going to be impacting that. I think for the Fed, one of the things that they've, you know, kind of continued to cite as one of their concerns is the fact that when you look at something like, you know, core CPI, for services, X shelter, right? Like they're picking this like super tiny slice of inflation dynamics. And basically, you know, we haven't seen a super material slowdown in that figure yet. And so I think, you know, the Fed is not, they've already exhibited an inability to fully acknowledge the overall dynamics that are at play with headline and core CPI. And so, you know, their predominant focus is on these kind of internal alternative measures of CPI. One of them is also something like median CPI, right? Which is rolled over, but has generally been somewhat flat. And so I think as the Fed is kind of looking, you know, I think even if we get 4.8% tomorrow, I think the one thing that the Fed is really going to be cautious of is what's happening with shelter. We've already seen peak food prices. We've seen peak apparel prices. We've seen peak new and used car prices. We've seen peak energy prices. Like all of these components are coming down and decelerating. The main reason why we haven't seen more disinflation yet is because shelter, which makes up 33% of the overall CPI weighting, is still accelerating on a year-over-year basis. Why is that happening? I thought the housing market peaked last June. Yeah, it did peak in last June. And it's the simple fact that the Bureau of Labor Statistics uses this figment of people's imagination called owner's equivalent rent to calculate shelter inflation. And it's complete BS. And it essentially lags the actual housing market by 8 to 12 months. And, you know, it's completely irrepresentative of what's actually happening in the economy today. And so I have some good friends over at Wisdom Tree, or, you know, very, very high up there. And they've basically, you know, substituted out the shelter component that the BLS uses, and they use the Zillow Home Price Index. And when they do that, they get overall headline CPI at 2.8% year over year, right? And that was for last month's data. So down from 5% to 2.8%. Still, that's above the Fed's target. But it's painting a much more rosy picture than the 5% that we're seeing in the official data, which is complete BS because of how much shelter is BS in and of itself.
Yeah, I hear that. I don't know what my dad was referring to here. My dad's here in chat. He said he and I asked him to clarify, but he said he disagrees. Inflation is just starting, in my opinion, real inflation. So I'm not sure what he means by real inflation, if that's cost at the store, but we'll see. You know, it's no matter somebody that has all the charts in the world or somebody just out in the world buying things, we all have our own opinions and nobody's right or wrong. And all we can do is, plan accordingly based on the diligence that we're doing. So share some of your diligence here with us. Share some of those charts you're looking at. Let's tie it all in. Let's give some people some magic.
Okay, great. Let's do it. Let's see. I just had the CME thing open right here. Let's go over this first and foremost. What we're looking at, we're just going to fire right through like 4 or 5 charts real quick. We're just going to hammer in really fast. What we're looking at here is the average price of crude oil for every single month. So we can see a slight uptick here from March to April, but let's compare that versus April of last year. We were at basically $102 a barrel versus $79.50 for the most recent month. One thing I love to do here is I edit this line, and instead of just looking at the dollars per barrel, I just look at the percent change from a year ago. And when we look at this data, if it actually updates, there we go, is we could see, oil prices are down 22% in the month of April. This is, a substantial improvement. So I expect to see the energy component down pretty considerably year over year for the data that we get tomorrow morning. Not nearly as much as we had in March, which was down 32.5% year over year. But clearly this indicates that.
Let me ask you a question there, though. Has there been no impact that's really shown up in the charts? Or is that just that small uptick from the cut in OPEC oil production?
No, this was probably from the OPEC supply cut, because what we've already seen in the month of May so far is oil made new year-to-date lows, right? So we had a brief uptick for the first 3 weeks of April, and we've seen a pretty substantial rollover, right? So we had an 8.5% increase in the monthly price of crude oil from March to April of 2023. But generally, right, this paints a picture of disinflation on a year-over-year basis. And again, that's what's really important here. So average price of crude oil for the month of April down 22% year over year. That's super, super important. Kelly, you mentioned global supply chain pressures earlier. This is the Fed's own data for the month of April. And basically right now, supply chains have not been this easy since late 2008, 2009, right? So when did this peak? This peaked in December of 2021, and inflation peaked 6 months later. So the fact that this is making substantial lows just over the past couple of months, basically implying that supply chains are no longer under pressure. And in fact, they're actually quite easy, if you will. This is, once again, great news for disinflation, right? Less inflationary pressures. If we look at, the quits rate in blue versus the headline year over year CPI data, look, this correlation is clear as day, right? The quits rate here leads headline inflation. And what are we seeing in the quits rate? We actually had a slight downtick in February to March. That's great news, right?
So
we should expect.
I'm going to pause you there just because you're such a wealth of knowledge. So everybody understands what you mean when you say headline inflation. What do you mean by headline inflation?
Headline inflation is just, it's the entire, it's the consumer price index for all urban consumers. It's the standard, CPI price basket, if you will, right? So it's just, there's a differentiator between core CPI, which is headline CPI excluding food and energy prices. But the Fed, their primary focus, at least in terms of what they're targeting, is coming down here to the headline CPI. And it's just called headline because that's what the headline is, right? What is CPI?
Okay, yeah, and for clarity from my dad, and I have to agree with him on this, he said, what I meant is the basket of goods measured is not representative of reality in the inflation measurements, which I would agree with in some, because I remember, what was it, about 6 months ago or so when inflation was 8%. I'm like, I'm buying goods at like half the things especially here in New York, I'm like, my cost of goods has gone up like 17% at a minimum, so, but I guess at the end of the day, that's the value of indexing things, because you get a broad array across multiple geographic locations, and different areas could be impacted in different ways. So I do think it is higher than what they said it was, though. They definitely skew the numbers.
For sure. Yeah, they definitely did. And I mean, last year we had the inverse effect of what we're having right now because shelter and owner's equivalent rent was lagging the actual housing and rental market. And so when we look in June of last year, home prices were up 22%, right? It was like this massive increase in home prices, but the shelter component was like historically muted. It wasn't showing what the actual inflation was. And so Kelly, you're spot on. I think, food prices year over year at one point were up like 12%. And certainly that was, not representative of what was being painted in the overall basket of CPI. I'd also like to go over this chart right here, which is just the year over year rate of change in average hourly earnings. And so again, we're coming down very considerably off that peak in March of last year at basically 5.92%. We had a slight uptick from March at 4.3 to 4.44, 4.45 in the month of April. But again, it's all about rate of change here and the general trend that we're seeing. And so I think, this also is going to lag what's actually, because look, this peaked in March of 2022. Headline CPI actually peaked in June of 2022. So 3 months later, right? So again, I think that will lag. When I look at something like credit, right, where everyone's talking about the whole banking system and what's going on there. When we look at loans and leases in bank credit, basically how much banks are lending in this environment, it's decelerating here. And when I look throughout history, what do we see when we start to get around these levels and start to roll over? We get a massive decline in credit. Right. And so when the Fed comes out and they do all their stimulus, they create reserves, but those banks need to lend out against those reserves in order to get the money into the real economic system. And so this massive acceleration that we saw in 2021 going into 2022 was part of why inflation was so hot. And so as this also starts to decelerate, once again, this gives me further confidence that we will see inflation as measured by the CPI and even the producer price index, the PPI, also cool down, also have disinflation, right? So this, this just kind of continues to fit within my model. These are the 4 or 5 main charts that I'm really looking at for disinflation. And it's the same 4 or 5 charts that I was looking at when I was saying we're going to get higher inflation at the beginning of last year. Right. And that's exactly what we saw. So I'm not going to stick to my, inflation is here to stay narrative that I had last year because the data isn't representing that. Right. So this is great news that for Americans and as investors, and hopefully the Fed starts to get the memo soon enough.
No, I agree with you there. I saw I'm curious what your thoughts are on what's happening. I'm trying to find a tweet I did. I retweeted this tweet that was by Alf, Macro Alf. And it was a really good tweet that it made me realize how much FUD I was following myself, and regardless of where you think you are in your knowledge of something, it doesn't mean you're immune to falling in the traps of a narrative that's being shaped. It doesn't matter what economic strategy you are or experience in the market. And this thread was essentially talking basically about, I don't want to call it, it's not fully FUD, but the threat to the US dollar as a world reserve currency. And of course, when we're talking about right now, the CPI data coming out, what's going on with the BRICS nations, this fear of the flight from the US dollar to other, some other asset, whether it's a new asset created by BRICS or a new currency, or would Bitcoin replace it, or it doesn't matter, put asset here, replace dollar with X, Y, or Z. And this thread really broke down why it was very unlikely for that to happen anytime soon. And it really made a lot of sense. And again, this could be a narrative in itself, but essentially what he had pointed out was the fact of the matter is there's so much, about 80% of the world trade happens in the US dollar currently. And in order to change any sort of significant portion of that, the question is, what asset would it go to? Because in order for you to trade on something, you would want that currency to be relatively stable. Now, does the US dollar have inflation, and are they printing dollars? Yes. But when you look at a lot of the other currencies in the world, if it's a Chinese yuan, well, that's not that doesn't fit some of the narratives that people want if they're going to trade by it. It's not. It basically is controlled. They have monetary controls on it from the People's Bank of China and the CCP. If it was going to be something many other countries in the world, inflation was far outpacing the U.S. inflation. In addition to the fact that because the U.S. dollar holds relatively stably compared to other global currencies, countries like Brazil, They like to trade in US dollar because then they basically can stock their US dollar treasuries and basically use that as a hedge against their own currency and their own inflation. So when I was, going through this thread, I was thinking about, it really made a lot of sense as to this idea. I think that the FUD idea out there in the narrative was like, the US dollar is going to lose world reserve currency. The truth is, it is. But it's probably not going to happen in the next 20 years. It's probably not going to happen in the next 40 years. It's going to be a slow burn to get to that point. But I just wanted to mention that, get your thoughts on that. And then if you have any thoughts on the dollar chart, the DXY, and what that's looking like going into the CPI, as if we don't know, we all should know, the dollar index is a great barometer for sort of at the most base layer, a sort of global gauge of risk on, risk off mentality. So what are your thoughts on these sort of things that I just threw at you?
I was joking with someone. I'm trying to remember who it was. It was one of my friends.
Gary Gensler?
No, it was not Gary Gensler.
His twin.
Although I would love to have dinner with him and just pick his brain on things. Anyways, I was talking with somebody recently back home in the States, and basically telling them, because they asked me a similar question about the dollar losing reserve currency status. And I said, as soon as, look, I'm here. Like I told you earlier, I don't speak any Hungarian. I didn't speak any Croatian, aside from saying hello, thank you, please, just the very simple things like this. And, I've been able to speak English pretty much everywhere I go. Yeah. And so I told my friend, I was like, as soon as you can't go abroad and speak English to foreigners, the US dollar is going to be reserve currency of the world. Right? Because it's like people aren't learning Mandarin and, like globally. And so I think, currency, especially global currency and reserve currency status, in a lot of ways is also somewhat of a cultural or societal phenomenon. Right. And so I kind of facetiously joking about how, the language dynamic of English being, also basically the reserve language of the world. Right. That was what I was trying to highlight. And so I think you're spot on there. I'd fully agree. Full transparency, I blocked Macro Alf on Twitter, so I did not see his thread. But in this case, I would likely agree with him that any loss of reserve currency status is going to be a slow bleed over time, right? Death by 1,000 cuts. It's not like all of a sudden we're just going to wake up one day and it's like the reserve currency status of the US dollar has basically been beheaded. It's going to be this kind of slow bleed, right? So those are my thoughts there. As we look at something like the Dixie, the US dollar index, let me just share my chart on this. But very simply, we're basically right on the year-to-date lows, if I remember correct. Exactly. And so I've kind of been highlighting some of the key levels here. And, that's exactly what we're seeing, right? There's major structure right here. This was basically the second half lows of 2022. And we've been rebounding right on here, right? We had this little fake breakdown at the beginning of the year. We've come right into this. And we've basically just been chopping around this area, right? One of the things that I love to do, though, here is I like to look at the 200-day moving average cloud. It acted as support all the way back here, flipped it into resistance at the beginning of this year. And, we continue to get rejected on that, right? And so long-term traders and investors.
Just for everybody, just so you all know what he means by the cloud, and this is a really great strategy. I don't see many people use, and that more people should. It's basically two different 200-day moving, basically 200 moving averages. One's exponential, one's simple moving. Exponential will move more quickly with price. Simple weighs all of the 200 bars. The exponential weighs the closer bars, the closer candlesticks, more recent candlesticks more heavily, so it moves a little faster. But it gives you two levels that are very important levels to look at, and that sort of regionally what's most important. Because I think far too many people, I think you'll agree with this, Caleb, far too many people will see a line on a chart and they think that's the exact dollar that is, if it breaks that, it's done. And every line, whether you're doing a trend line, support and resistance, horizontal lines, or moving averages, you need to look at them in sort of a percentage-based sort of regional zone that you're looking at price to interact with.
Spot on, Kelly. And yeah, I've really been trying to spearhead this 200-day moving average cloud dynamic because, traditionally I've always been focused on the EMA. Not to say that there isn't value to the 200-day simple moving average. But I mean, look at the charts that I have on here. I don't just have a single level of support and resistance. I have this range right here that acted as support and resistance. Same right here for the lower bound of this range. There's a range of support and resistance. So why would I just look at one moving average when I can look at a combined value of the exponential and the simple, right? So I prefer to look at this cloud dynamic, and it's been beautiful as resistance here, perfectly, almost perfectly on the 200-day exponential moving average, and then right in the middle between the simple and the exponential, right? I have the exponential in teal and the simple in yellow. And so this is, generally great news. So as I look at the dollar right now, we're below this 200-day moving average cloud. Both the exponential and simple have a downward negative slope. Generally, right, and we flipped it into resistance 2 times, right? Big major rejections here down to new lows, right? And so from my perspective, the dollar at this point, from a technical perspective, is likely to head lower. That doesn't mean that we can't have these counter trend rallies come up, back up, and retest the zone, and perhaps get rejected once again. But when I see the dollar starting to regain some life here around this area, this isn't any surprise to me, because it's exactly where we rebounded at the beginning of the year. And it was a core support level from mid 2022. So, we could see some life here, but if we see a breakdown, this is massive bad news. We could basically flip this entire support range into resistance, right? If we get a decline down here, rejection, this would be, amazing for the dollar to go lower, basically fueling a bit more of a risk asset rally, if you will.
Man, you got such good charts. Well, I know we only got about 7 or 8 minutes left with you, and just so everybody that knows that's watching, start throwing in some of the assets you're looking at. We're gonna do that Turbo TA the last 30 minutes of the show once we kick Caleb out of here and excommunicate him for a week or so. And me and Caleb, but so everybody knows, if you like having Caleb on the show, throw a 1 in chat. I talked with him about it before. Unless you all hate him, which I doubt you do, because he gives some great data. We're gonna be having him on a regular basis, not every week, but several times a month, because he's got stuff doing. He's traveling the world, but it's always excellent to have him on here. So throw in chat some of the coins you're looking at, and when we see a bunch of the same one, we'll look at it. If I do pull up Pepe, it's not because I in any way want to look at it. It's only because you all asked for it. I do not. And remember, everybody, if you were watching yesterday, I pulled up that chart because you all asked for it. And I told you this is probably going to be a zone that it drops. I mean, it fell exactly as Carl from the Moon would say, exactly as expected. But what are some of the other, let's look at what you're looking at on Bitcoin. Let's do Bitcoin and Ethereum, and if we have time for one more, we'll do that, and then we'll get out of here with you.
Perfect. So first and foremost, let's start with some on-chain data. What we're looking at here, Kelly, you really put me onto this, so big props to you. This is the short-term holder realized price. And so earlier in January, when the price of Bitcoin got above the short-term holder realized price, essentially the cost basis of holders younger than 1 year, once we got above there, I materially flipped a little bit more bullish, because generally that's what happens at the start of a new bull market. Look at what happened during the COVID crash. We got above that short-term holder realized price. We even flipped it into support, and it was off to the races. And so when I look at short-term holder realized price right now, not only is price above that level, but it's been upward sloping now for the past 4 or 5 months. This is great news. And so right now that short-term holder realized price is at 25.3 thousand. I want everyone to remember that number, 25,300, right? When I look at Bitcoin right now, again, we're looking at this 200-day moving average cloud, right? 2 main support and resistance structures. One thing that I talked about with my own YouTube channel recently is, I would not be surprised at all if the price of Bitcoin basically chops within this range for the next several weeks or maybe even a month. And I also wouldn't be surprised if we come down and retest this 200-day moving average, 24.659, right? 24,600, let's call it. But one thing I really want to highlight here, remember, we were just looking at the short-term holder realized price, basically 25,300. When I look right now at where the 200-week exponential moving average is, 25,239. So we have a lot of confluence in this zone, right? And when we look at Bitcoin historically, look at how cleanly it's rebounded on this 200-week moving average cloud, right? Bear markets, we come right into the zone. Sure, we can fall below it, but typically we've gotten above very quickly. Look at the 2018 bear market, perfectly used it as support. COVID crash, sure, we got below it, but then it was off to the races. I was highlighting this in real time in August of last year that it could act as resistance. Sure enough, it did. That was right here. And I even warned about it earlier this year. But look, I really want to see us flip this into support now, right? We have a massive opportunity to flip this into support. And I just want to remind people, if we get a decline to 25,200, 25,300, in my opinion, that is not bearish, right? It would not feel good to get down there. It'd be about an 11% decline versus where price is currently trading. An 11% decline would suck. Trust me, it's not going to feel good in the moment. But if we can fall onto this range and flip this back into support, again, it lines perfectly with the 200-week exponential moving average and the short-term hold to realized price. There's a lot of price memory happening right there. And we should expect, my base case, if we get there, we're going to rebound on that level. Could I be wrong? Absolutely. But that's my base case. So
Caleb, I gotta share a chart with you that Will Clemente put me onto. I think I'm gonna be able to do this. I'm gonna share with you on Zoom, and then also share that is right here. I'm gonna pull this up. This is really interesting. Where's basic? Here, I think you'll be able to see this. Let me know. Can you see the screen? So this is essentially tracking the momentum of new addresses. I have the short-term holder cost basis that I put on here as well, just so we could see. It's the same thing that you're talking about. When we cross above it, it tends to be pretty strong when we fall below it. Now, on the flip side, these two moving averages, this is a 50-day moving average on basically new addresses, and this is a 365, basically a yearly moving average, so basically smoothing it out. And we can see once we cross above this, this was clearly the market floor, but this was very early in Bitcoin back here. But if we look over to these zones, when we cross down, when this comes down and tests this and doesn't break below it, we still have room to go. When this breaks down below this, not only was price below, this shows that the new address momentum, the interest is waning. Now, when we break above this, look at this. This is perfect. This front ran the short-term holder cost basis signal. This, as soon as it's crossed above it, and then we're holding above this whole way. Now cross below it, top of the market. This was a little bit of a fake out, cross above it. And this is, I believe, let me move this. This one here. Well, this is the May, this is the banking right here. Yeah, crossed over October 25th, and we still then we had the washout down, but this would have been a great signal in terms, if we zoom in on this, I can just kind of go like this. If we zoom in on this, let me orient myself here. Okay, the FTX collapse right here, we can see that interest was already coming in. There's a strong bullish divergence of interest coming into the market right here. I'm getting a bunch of dings in my ears. Want to make sure I'm not having some issue with the screen. Second. Oh, yeah. So it's okay. They said they can't hear you. It's because I have this screen on. But we can see this bullish divergence of essentially the interest in the space. New addresses forming, getting a little rejection, but then actually crossing, cross back here. But this was really interesting chart. I thought you'd like to see. So I wanted to share that with you. Now I gotta throw it back to have you on the screen so they can hear what you had to say. Yeah. Sorry about that.
No, it's all good. I wonder if they can hear me now. I guess we'll find out here in a second if we start to see some comments. It might have started when you started sharing your screen. I'm not sure, but no, that's super interesting. One of the things I noticed is when you zoomed in on that level, it almost looks like the chart kind of changed a little bit. So, that crossover that I was looking at the end of October that we initially thought, it looked like it actually happened in like April of last year. So that's a really interesting indicator, though. I don't know how effectively it can maybe be used for, signal for what's going to be happening next. But from a fundamental perspective about Bitcoin, the monetary network, that's a great data point to have.
Yeah, sorry, I was getting a bunch of dings from my mods in my ear because they're like 30 seconds delayed. So after I fix something, I'm still getting dings. I'm like, what? All right, well, I'm gonna press you for 4 more minutes of your time. Let's look at Ethereum, and then once you leave, we'll dive into the altcoins with everybody else.
Let's do it. So let's see here. What do I even have on Ethereum right now? Well, let me do ETHUSD.
Because Ethereum's been performing pretty well. comparatively the last week.
It has been. Maybe what we could do is actually look at some of the more short-term dynamics here for Ethereum. And what I want to do is let's get this onto hourly. And I shared a chart on this earlier.
For everybody that's watching right now, if you have not yet, hit that like button, hit that subscribe button, ding that bell, show some engagement with this channel. Be a part of our community. You see, we don't only talk charts and tell you the exact targets. We try to bridge that gap from beginner to pro, giving you alpha while also making it understandable. So I just wanted to again say thank you again for Caleb for coming on, and everybody show your love by hitting that like button, hitting that subscribe button. We got 242 people in here, 114 likes. Let's drive that up to 200 before the end of the stream. Take it away, Caleb.
Thanks, Kelly, and great little coverage there as I rescue this chart and try to bring it to life. What we're looking at is Ethereum 1 hour candles, and what I've added is the 24 period RSI. Okay, 24 period. Why are we looking at that? Well, 24 hours is one full day, so this is pretty good, interesting short-term structure for Ethereum. And one of the things that I noticed here is, I called out this bullish divergence that was occurring back in this zone. And, maybe I could actually modify this to come in right here. That's more appropriate. And, we had this bearish divergence where price was making higher highs, but RSI was making lower highs. Now we had a bullish divergence where RSI is making higher lows, but price in and of itself was making lower lows. Same thing essentially happened in the most recent environment where we had this low wick right here, but RSI was once again making higher lows. And so I pointed this out earlier this morning. I don't know if we'll get a repeat of this kind of acceleration where, Ethereum essentially gained, how much was this? 8.3%. We could certainly see that, but, it's worth noting that we are having this bullish divergence occur for the RSI, and it just so happens that, we're on a pretty solid kind of short-term support level. Like, in my opinion, this kind of, where are we at here? 1,790 to 1,830, right? This is a valid support zone. And so I think if anything, the lower we get within this zone, you might actually be able to get away with taking some risk here, but you have to be willing to sell that exposure if we break below this and fall below these late April highs. Coincidentally, this was on my birthday, April 26th. We have this super low wick right here. If we fall below there, you could cut your positions. So this is really for the traders out there who are watching this. Again, like I said, the lower we get within here, the better your risk reward becomes, right? Because if you're taking a position up here to sell it back into this range, your gain is 6.5 and your max loss is 5.5. If you take that same position when price is down here, your max loss is now 1.5% and your max gain is now improved to 11.4. So the lower we get within this green range, if we even get back down there again, the more attractive short-term risk reward becomes for those who are trading. And again, I think this bullish RSI divergence is definitely something that we should all have on our maps right now because it could produce, bullish tailwinds for other L1s as well. Obviously, you have to do research on those individual crypto projects, not just, from a fundamental perspective, but from a trader's perspective, from a TA mindset, right? What is it showing? What are those charts showing in terms of bullish or bearish RSI divergences? But if Ethereum basically has a green light, this bullish RSI divergence, we might see that ripple through to other layer one cryptocurrency projects.
Alpha, alpha, alpha. That should be your name on here. Hey, Caleb, I really appreciate your time. I hope you have safe travels. I'm sure I'll be seeing you around the space online over the next week or so. And then maybe I'll twist your arm, get you back on either next week or the week after that. I really appreciate your time. Everybody, if you're not following Caleb, you can see right below his beautiful face there that those letters that are in basically character form right there with the @ and then the C and then the ALEB. Caleb Franzen, go give him a follow. And Caleb, you got any closing words or any words of encouragement going in tomorrow? Should people be trading this volatility or should they be sitting on this? What would you say going in tomorrow?
I don't like to trade the volatility myself. I'm just not good at it. But for those of you who are, congratulations. I wish I was more like you. No, I think, for me, I like to kind of keep things on pause here. Certainly tomorrow is a risk event, but I have a generally optimistic view of how things are going to go. Again, I think, I expect to see 4.8% on a year-over-year basis for the headline CPI. So, happy trading for those who are going to trade. My suggestion is don't trade it. because you never know what the hell is going to happen. And that's not really trading. It's much more like gambling, right? So if you can find those gambles that have extremely attractive risk reward in the short term, do your thing, but it's certainly not for me. So I won't be partaking. But Kelly, thank you so much for having me.
Before you go, you got to tell us something about what you're doing with Cubic Analytics and where people can find you.
Yeah, thank you, Kelly. Cubic Analytics is my newsletter that I started in May of 2021. I had around 600 followers on Twitter when I did that. Today, we're at 29,800. And the newsletter itself has 5,200 plus free subscribers. If you subscribe, I called it Cubic Analytics because I take this 3-pillar approach to analyzing markets. So I do macro, the stock market, and Bitcoin. So if you're interested in one or all 3 of those things, I promise you the free Saturday newsletters are going to be right up your alley. And then I also offer more in-depth research about the stock market and Bitcoin specifically for premium members with a whole slew of different benefits, including weekly group calls, which I've been hosting that have been fantastic, where you can basically ask me anything you want in person. It's an awesome little newsletter on Substack, cubicanalytics.substack.com. Kelly, thank you for the opportunity to pitch that to everyone. And it was a pleasure coming on. Always love chatting with you, man.
Hey, man, I appreciate you. Be safe, and I'll see you on the flip side, my man. And everybody, throw that one in chat for Caleb if you like him being here. And definitely go give him a follow. Caleb, I'll see you another time, my man. Have a good weekend, brother. Now, everybody, this is where you can find Caleb, which is at Caleb Franzen. I like to always point these things out. I'm not trying to shill our Twitters or like my Twitter or BitLab's or Caleb's. When I do this, it's because there's so many damn fake accounts out there. I want to make sure that you're following the correct one. So make sure you go give him a follow. And again, if you have not yet, throw down in below where the mods are looking at what coins you guys are calling out. And we will be doing a bunch of TA here, some turbo TA, if you will, on a bunch of coins for the rest of the time, breaking down some setups so we can be prepared going into tomorrow's volatility. Now, if you haven't yet, come over to the Academy BitLab, which is BitLab Academy's Twitter page, which is here at Academy BitLab. Follow and hit that retweet button on today's tweet. And hit that like button. If you retweet this, hit that like button and follow. You're entered to win. We've given away $100. We've given away lifetime memberships to the Academy, to the courses. We've given away 3-month memberships. We've given away all kind of stuff. So just appreciation for you all helping support the channel. I just want to say, 1, thank you. And 2, come over here and do those retweets and hit that like button. And you will be entered to win. We draw on Fridays. So let's go ahead and look at what's going on in the market. And first off, shout out to each and every one of you here that's watching. Thank you all for being here. We got quite a bit of time left. Hit that like button, hit that subscribe button, and ding that bell. Let's get this going. I appreciate each and every one of you. Now let's look at these markets. Let's go ahead and pull up the chart. I got all the stuff here. Let's kind of come over here. Let's look first. We always need to zoom out first. And in this case, not just on a time scale on an asset. Let's look at the totals chart here. Let's see what's going on. Let's see if there's any dynamic shifts. Let's see if there's any setups maybe we did not see before. So first off, we're going to look at Bitcoin dominance. So we're going to come over here, hit auto, zoom it down, and we can see we are starting a little bit of a downtrend, which could be incredibly bullish for the altcoin market if Bitcoin dominance does continue to fall. Of course, right below us, we've got this level here, which not only is a peak, this line here is not something I drew. This is part of one of the new indicators we'll be releasing very soon called Mesopic Vision, which is a basically 3 indicator pack with 3 different looks at the volume profile. Excuse me. So we've got a little bit of a gap, an anomaly in liquidity and in the order blocks here, which is why this automatically put this line here. If we make this a bit bigger, we can look back period. Let's do 225. There might be a different, let's see. Okay, yeah, it's going to be the same thing. So we've got a sort of order block here showing that there's an anomaly in liquidity. And interestingly, when Bitcoin dominance fell down, this is right about where dominance got rejected, only to break. So if this does come down, I would be looking at this region here, not only because of this previous high, but also because this box is sort of illustrating this is a high area of interest for this asset, for the dominance to come back to on this chart. And this would be coming down another about 1.5% or so. Let me come over here to the measuring tape. Yeah, it's about 1.12%, which is a pretty big move for such a large asset within the crypto ecosystem. So point here, what we're looking at is we've been in this range. Dominance is starting to fall. This is the level right here. If we look, we've got a level right here that we're finding support on. If we lose this, dominance comes down. This is signaling that the altcoin market may be either falling less fast than Bitcoin, which is very unlikely. This would probably actually signify that altcoins are breaking out, because there's the altcoin market as a whole doesn't tend to fall slower than Bitcoin when Bitcoin falls. When Bitcoin falls, it's a sort of a bellwether for unhealth in the space, and people tend to, there's a flight from riskier assets, which would be altcoins. And the further down in the coin market cap ranking you go, the more volatile they could be. Now, that's what we've seen this. Let's go ahead. Let's look over here at the USDT dominance. Now, let's go over here. I'm going to double click on this. Nope, that's not what I'm going to do. Double click here. There we go. And we can see here, the reason why I had it like this is because the Bitcoin price, which I have turned off, we can just kind of mute this just because it's not going to make sense without the Bitcoin price. This goes up as Bitcoin price is falling. This goes down as Bitcoin price is going up. This is largely in part, we've talked about this before, this is largely in part because if people are basically selling their USDT, AKA buying altcoins or buying Bitcoin or buying any digital asset, this dominance falls because basically they're transacting out of USDT into other crypto assets. When this is going up, they're selling out of those crypto assets into holding their dry powder on the side, their USDT. So we really want to pay attention to this, and we can kind of turn off the volume on this. We really want to pay attention to this. Let's go to, okay. So boom, boom, boom. All right. So this is that huge falling period in 2022 up until November when in December when the market sort of bottomed out. And then this is that first impulse in Bitcoin price. So we can see that this has a strong correlation. I can actually, I've pulled it up here before. BTC. I can't see my computer screen. Now, do you see this relationship? We can turn the arrows off. We see when this is falling, this is Bitcoin price, USDT dominance is going up. When this is pushing up, Bitcoin is still falling, but it's not falling as far. But as soon as this starts dropping, this is when we get that explosion in Bitcoin. So we really want to pay attention to this because as it stands right now, this is still looking questionable at best for USDT dominance. But we can see that we are sort of in this sort of downtrend with these lower highs. What we'd like to see is this reject from here and lose this multi-year level of support, which we've already somewhat broken through, but found our way back on top of. We'd like to see this come back down and lose this and break this low right here. That's what we'd like to see if we're really expecting assets to move. So we're just looking at some of these things really quick. That's all we can. Let's dive into the markets. The dominance on, the total market cap, excluding Bitcoin, all altcoins. We can see this is falling. It's still on support. We'd really like to hold the support without much more than a wick like we have here on this 3-day. So at some point we'd like to see this bounce, right? So let's go ahead. I got a list here for a bunch of coins you all said. I saw Jeanette. Shout out to Jeanette. Thank you so much for the super chat. I appreciate every super chat when you all send them. It really helps things, helps us keep the lights on and the equipment we have to buy and the time we spend. So it's a special appreciation to anybody that super chats. I really appreciate you. And you called out, you wanted to see ApeCoin. I don't think I've ever done a TA on ApeCoin. So let's go ahead and do some TA together live. We're going to be doing, we already did Bitcoin and Ethereum. We're going to do ApeCoin, GRT, AGIX, ICP, and near. If we have time, we'll also do HBAR and render, but we're going to run through these very quickly. So we may even do more than that. Hit that like button, hit that subscribe button, ding that bell. Now let's go ahead and look at ApeCoin. This is ApeCoin on the 3-day chart. Let's go ahead and get a couple lines here. So we've got a bit of a falling wedge here. Now let's come down to I'm not going to go through all the time frames just because we have limited time. So this is looking, go ahead and draw this a little bit more productively. we go. Yeah, it's a bit better. So ApeCoin is coming down. ApeCoin's coming down. It's coming down to this level of support, but it's not quite there yet. It looks like it has more room to fall, which currently it is at $3.31. It could be dropping and still be in fine health in terms of even with downward price action, that still could be within a healthy sort of move. This is not out of context based on what we're seeing on this larger chart formation. So let me kind of draw this a little better. Yeah, I don't know. I don't know because let's go ahead. Let's get another one. This may be a little more accurate. We're kind of coming into a region either way. If this continues falling, shout out Mr. Bernie. You got, thank you for the way you dumb down charting and analysis for us dummies. Hey, we're all dummies. I remember when I first started looking at charts, I thought I was listening to another language. Please explain your process for bull market price predictions. I absolutely will. Okay, this, and thank you so much for the super chat. I appreciate it very much. If this were to continue falling, this is going to be a speculative area based on how we drew the trend line, because this could also be drawn option T from here, coming across. That would be a channel. So if this were a channel like this, then if we lose this zone right here, which is this trend line that comes across, this would basically be about the $3.22 range. If we lose this or this bounces around, this will of course fall a little bit lower. It's 22 to 319. If this falls from here, we got a projection all the way down to about 278. If this further along, about 270 for ApeCoin. If this does bounce, then we could see, you know, basically if we do option F, top to bottom, we can see if we come across, this is important. If this were to bounce from here, this looks like it could work its way up to the golden pocket, which is right at where this descending level of resistance is. Now, if we look at this, actually, we're looking at this on the 8-hour. If we look at this with the, looking at all the indicators, we do have on balance volume, which is this O, on balance volume, bullish divergence. We do also have the golden, we do also have the relative extrema was out, but it's just, this is showing strong bearish pressure. It's just the price action is just, the momentum is accelerating to the downside. I know that because we could see this arcing like this. So this is accelerating to the downside. I do expect to bounce at some point with ApeCoin. I do expect to bounce at some point with ApeCoin. We do have a floor starting to be identified here, or very undervalued region, which is what this blue wave is on the significant, which is what this blue wave is on the significant movement right here. We don't have any bullish divergences on the volume. Let's come down to the 4-hour. 4-hour, we are starting to get some bullish divergences come in, so there's some underlying bullish pressure. We have this large wave. This does look like it wicked down, came back up. Maybe as another smaller test. I do expect a bounce would likely happen here. The question is going to be, even from this smaller local zone, option F, smaller local zone, if this were to bounce from here in this region, the golden pocket would be right at where these previous lows are, which is right here at $3.50. So I would be watching this area right here if there's weakness coming in as we come to the golden pocket zone on this relief sort of bounce. If this does have strong move and it's not overheated immediately, very likely this could continue to the upside. Now, GRT, I already have a chart on this, so let's just go to that chart. Come over here. This was, turn that back on, save. Now come over to, I think it's on my alts chart. Now, okay, graph. Let's look at this. Now, we've seen the graph a couple days. I show this one regularly, so we don't need to do the macro. We kind of know it fell out of this zone. Now, this is, look at this. Look at these blue boxes. These blue boxes are auto-populated from the Mesopic vision. You see this? This is showing you the volume profile, and is it showing you areas of interest based on volume anomalies within and sort of lack of interest anomalies, or super heightened interest. It's either the extremes. And so we get these boxes, both there's red boxes and blue boxes, and we can see that this area is exactly where we've come down to. Now, if we were to fall from here, the next level down would be about 9.8 cents, 9.85. That's just looking at this volume profile identification, these order blocks. Now, we do have the blue wave down here on significant movement, which is indicating that the momentum indicators are multiple momentum indicators are in agreement that this is getting in very undervalued zones, meaning the momentum indicators are very low. They're not resetting. I mean, they fully reset. They're not starting to move up. They're very blue. The relative extrema is neutral right now, although we've fallen through this level. So there's not much of an impetus for an upside price action. This is on the 12-hour though. So let's look on a smaller time frame. So 4-hour, look at this. We got the blue wave. And this is, look at this. Although this candle's moving down, this is somewhat of a bullish setup here, or bullishness is brewing, I should say, because this is turning green. Now we can see this turned green here and there wasn't a bounce. This turned green and we got consolidation. In this case, I want you to pay attention to this with the relative extrema. When these turn green, this does not mean there's absolutely going to be a bounce. When this turns green, this is saying that the bearish strength to continue the price action down is not sustainable. There could be either consolidation or a bounce. In this case, we got consolidation. Now, this is the green candles is reflecting that the relative extrema bars are out to the downside. And we can see we got that consolidation, which is kind of still playing out. We're still getting a push down, very blue wave. I'd like to see some sort of bullish divergence on the hidden volume or some bullish divergences here, but this is still looking relatively weak. If we come down to the 1 hour, look at this. This was rolling over. We got some green candles, but it was fully neutral, no blue wave, no bullish divergences here. So we didn't get the confluence we needed to pull the trigger. That's why it's important to get that 1, 2, 3, 4 setup, having multiple different points that are agreeing with it. Now, I want you to know that on this sort of zone, this is the low that we're seeing here. So this low is basically about 11 cents, 11.10. Now, if this coming back to the 4 hour, the next zone down just on price action, the low here, option J. Now we can see we've got a region here from the highs over here and the lows here. Now, if this were to continue falling, I'd be looking at the 10.5 and the 9.7 to 10.5 sort of region for GRT. If this does get a bounce here and starts to work its way back up, option F, do our option F, or if you're on PC, it's alt F. I'm going to delete this other Fibonacci, boom. The Fibonacci from here, if we were just to, suddenly start moving up, if bullishness just came into the market, we can look at this full move here. Golden pockets up here at 15 cents. But what I'd really like to look at is probably a move from this breakdown right here, because that's when we really started moving down. And the golden pocket on this, look at this. This lines up perfectly. This is how you know it's a good level to pull. This move from top to bottom, the golden pocket, the golden fib 0.618, 0.65, these two lines is right here at the top of this move down. So this is going to be a number we need to watch. 1283 for GRT. If this does relief rally up to this zone, I'd be watching that. I'd be really watching that for strength coming into the market. Now, if Bitcoin and Ethereum or some regulation or Gary Gensler gets removed and they they start a digital asset commission that's has a DAO on it with a bunch of crypto enthusiasts and markets explode, then I think momentum would carry strong. But we can't just plan on that. We're looking at the charts. This looks very weak. There will be a bounce at some point. Will it be here, or probably maybe retesting this zone, or maybe a little lower? We can see that we have these two. If we do continue down, I'd be looking at this level right here, basically 11 cents, 10.94, basically 11 cents. I think that this could be setting up for a bounce. I think I would not be playing the bounce because of the CPI data coming out tomorrow. I'd be looking for opportunities to buy at certain target levels below. And maybe you can use these as a map for where potential, setting up 1, 2, 3 buy orders in right around in this region right here, right around in this region right here, right around above this, right around this region here. That's what I would be doing now. Let's see, GRT, AGI. IX. Let me look at the, okay, awesome. Okay, now looking at AGIX, looks like we did do some TR on this. This did not play out. It did roll over. Now we see we had a volume anomaly here with this red box. This would likely be resistance once price comes back up into it. Now, if we look at this and we kind of come out, let's come to the 12-hour. We don't have much. This is basically price discovery to the downside, at least on this chart. I don't know what the oldest chart of AGIX is. So as I'm looking at this now, this is looking very weak, very similar to GRT as we just saw. So if we do this option, okay, that's what I want to do. So from the bottom to the top, is the line? Bottom to the top, we can see doing this, we get basically a projected map to the bottom. The 1.382 is all the way down here at basically 17 cents. The 1.618 is quite a ways down at 9.7 cents down here. So that is a possibility. If we look at the more recent move, we can kind of just put this here. I'm going to delete the Fibonacci. If we look at the most recent move, which is this up and down, option F from the bottom to the top, we can see, come on, auto. This is the bottom right here, and this is the top right here. So we can see, look at this. So this is, I see confluence here. Why do I see confluence? I see confluence because the bottom of this most recent move, this dip into this rally here, I basically did option F or alt F, or you can come over here to your left toolbar, 1, 2, third one down, hit the little arrow and find fib retracement. And then once you turn it on, click here and then click here. So then what happens is, this is similar to what Bernie was asking about, how you do basically projections for price. Same thing happens for when we're looking at price to the upside. You do the top to the bottom and it projects a map to the, projects a map up. So looking down here, the 1.618 on this level right here, it's actually the 2.618. 2.618 on this level is right about where the price action came into. And if you do it from the candle bodies, you see it's pretty close. If you do it from the candle wick, it's a little bit more express right there. So we've kind of come into this region, this 2.618. We've already fell down to the 1.382, fell through down to the 1.618, fell through this level here and tried to rally, rejected off this level of support. And we can see we've kind of bounced in this region. If this were to continue down, I'd be looking, sorry, if this were to have a relief fib from there, if this were to come up, if this was weak, it's going to get rejected at the 0.382. If this is a little stronger, it still could come up here to this. This is previous level low and the golden pocket right in this region at the 29-cent level. Now, if this is just going to reverse, I'd expect this to come up and find some resistance on this line here, since we already have. Find some resistance, maybe find support on 382, and then come up back into this. That's what I'd be seeing with AGIX. It's looking weak right now, but I do expect bounces to come. If we get any sort of positive or in line sort of numbers with the CPI tomorrow, then we can count on that price action coming up. Now, ICP, and on this one, I will do not only the TA, but I'll also do a sort of projection. So now, what we can do for this to get the projection, we do the full chart here. I don't want to do that. I want to do, where's my ICP chart? Where's my ICP? Let me come out of this. I've got ICP somewhere right here. So auto. So what we can do on this, we can come to a weekly. This is not the one I want to do. Let's do, we need more price data. We need more price data. You need the up and the down. Do we not? I guess this one didn't have, when this launched, it got crushed. So I'm not going to do it from the top here. I'm going to do it from the candle body top right here. Option F from the top to the bottom. This is the bottom here. And what we can see is this gives us our basically projections to basically the upside. So if when ICP really starts running and we break previous all-time high, well, first off, we got to get up to the golden pocket, which is 140. That's just to the golden pocket. And then once we get above that, this is a very loose, this is not something I would trade specifically on, but you take the high of the previous cycle, and I'm not going to do this wick because this is basically the release of ICP, and I'm going to do it just from the conservative candle body, top to bottom, and then you get if you double click on your Fibonacci, you can make sure you have 382, 618. I put 652 as well, 0.65, so you can have the golden pocket. 1.618. It doesn't matter what order these are in. It's going to put them in order correctly here. 1.618, 2.618, 3.618. Maybe a 1.382, but we can see I would be looking probably somewhere between the 1.618 and the 2.618, which would be I mean these are high numbers. This is moon math, so I'm not trading on this. This is just a fib projection. 372 to 593 to 575. That's if we were doing that. Now looking more locally at what's happening with price action right now. By the way, have you hit that like button? Have you hit that subscribe button? Have you ding that bell? Do it. Let's get involved. Now we can see we're coming into this level right here. This is this previous low and this sort of box region. All these highs. Look at this. Come on. All these highs and then the lows right in this region. You see this? Rejection, 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 rejection off the bottom side, bounce off the top side, and we're in this zone. If we lose this level, I expect we probably be retesting these lows down here at basically 482, between 482 and 490 if we lose this level. Now this looks like a double top formation, but markets are being very unpredictable right now with the uncertainty with all this economic data and the pause, the impending considered pause on the Fed pivot, or the pause on the interest rate may be coming. There's a lot of speculation around this. If there's news that's not going to support that whatsoever, we could see markets pull back and get a final washout. Now, if we look at this just more specifically, just on the technicals and not looking at all the context, we can see that we've been having a lot of green candles coming down to this, showing that this is not, it shouldn't be so sustainable, but we're getting a lot of downward pressure. We do have the blue wave here on this significant movement. Now, this is on the 4 hour. If we come down to the 1 hour, we're seeing a lot of, we're still seeing a lot of pink candles here, which are the red candles sticking out on the relative extrema, showing a lot of weakness anytime we come into the EMA ribbon. This really tried to break out and got rejected. Bit of a bull trap here. Now coming down, we're getting weaker and weaker. So this does look like it's trying to round, but this is very, it's not set yet. So I would be waiting to break this high right here. I'd be more conservative on this because of everything in the market. I'd be waiting to break this high here, and then we can see, I would do it from the candle bodies here, option F, coming down to the bottom here. 382 and this high are right in this zone. So if we can't break this, likely retesting these lows and then potentially going lower. If we're able to get past this, we're going to be testing 540 and then up to 560. And then probably if we're clearing these levels, we're basically making headway to reinitiate some bullish price action. Now, I'd be looking at this level right here, 564. If we're able to break this level, then we'd be looking basically this region here next. Next level up would be the 2.618 here, 640, and then all the way up here to these previous highs of this local zone, 673. Now, with that being said, I love you all. If you have not yet, head over to the brand new BitLab Academy, sign up. Come over here. You can start your education for free. Click that button. You have two options. You can start for free today, which is basically the beginner's courses, Bitcoin 101, Blockchain 101, self-custody, to learn how to move coins between your hardware wallets, and a few select lessons from the other courses, but it's going to be very limited. We just wanted to give everybody a jumpstart platform if they wanted to start and they could not afford to get that basic education. You get a lot of that education here on this channel as well. Now, if you wanted to jump into all access, come over here, jump into all access right here, and you're going to basically be able to have access to all of the brand new courses and all the courses that are coming out on BitLab Academy. All of this stuff right here, and we have a lot more that we're adding here very soon as well that's already been being filmed. So I just wanted to say a special shout out to everybody, and come over to BitLab Academy right here at Academy BitLab. Follow us right here on this page. Hit that follow button and retweet this daily tweet, and like this tweet. Share it, like it, follow us. You're gonna be entered to win some great stuff. I love you all. I hope you have a wonderful day. Get involved, bitlabacademy.com. Over and out. I'll see you on the next one. Adios, muchachos. Thank you for coming. Thank you for tuning in. BitLabAcademy.com. Hit that like button, sucker.